One of the things that we do here is we put no limits on what we're going to do for members, as long as it's within the bounds of integrity. Wherever the need is, we might do it.
Welcome to the pre-Christmas edition of Friday Five with Dave Adams. Today I'm going to be speaking with Michael Poulos, CEO of Michigan First Credit Union, headquartered in Southfield, Michigan. The credit union has over $1 billion in assets and serves over 170,000 members, but it wasn't always that way. I know because I met Michael in 2000, the year 2000, when he arrived in Michigan after serving as a CEO for a couple of New York and Florida credit unions. He arrived on the scene at what was then Detroit Teachers Credit Union. And he and his team and his board of directors have been responsible for a remarkable transformation, a new headquarters, a new culture, incredible growth and emphasis on serving the unique financial services needs in Southeast Michigan. The credit union now has a charter statewide in the state of Michigan. I know you're going to enjoy this conversation with Michael Poulos. He has a lot to share in terms of leadership, lessons, the credit union difference, and how Michigan First Credit Union is approaching service during these challenging times. Well, Michael, welcome to the broadcast.
Yeah, good morning, Dave. Glad to be here.
Well, you know, this will be our last broadcast of the year, the week before Christmas, and then we're going to take 2 weeks off, and we're going to start a new format in 2021 on Friday Five, where we invite a CEO and a member of the C-suite to talk more topic specific. For the first quarter, it'll be HR and culture issues, and then in other quarters, it'll go to technology and marketing and other things. But this will be the last in a series of one-on-one leader profiles, and I'm really glad that you're participating. So happy holidays, Merry Christmas to you, first of all.
The same to you, Dave.
In keeping with the set of questions that we've run through with leaders, and I've really enjoyed this, and I think our viewers have as well, because we get an opportunity to have these conversations where we learn more about industry leaders like yourself and get perspectives on leadership and the credit union difference and how you're approaching the current environment. So let's get right at it. And you and I chatted a little bit before the broadcast. I remember you arriving in Michigan in 2000, and you and your team have just transformed the credit union into one of the best and most progressive in the country. But kind of recount your career journey, how you got started, and a little bit about the evolution here in Michigan.
Well, it's really interesting. I have an accounting background by college education. Ended up actually in Syracuse, New York, as an accounting supervisor in the Postal Service. At that point in time, we were expanding our family. My wife and I, we needed to do some work on the new house that we had bought. And we were looking for, frankly, a second job. And all of a sudden, my boss comes to me one day and at the post office, and he says, we're looking for somebody to run the credit union. Are you interested? And my first question was, what's a credit union? Okay, it literally was probably 100 feet down the hallway, and I had no idea. I'd been there many, many years. I had no idea what the credit union was like. And I said, what is it that you're supposed to do anyway? And he said, well, you're supposed to go to this quarterly dinner. You're supposed to write checks for the dinner, and it was a non-cash operation. So if you wanted $5 out of your account, we wrote you a check for $5, which was weird. But I found out that I really loved doing that more than what I was doing at the post office, and decided on a career change at that point in time.
Wow, and it's always interesting when someone like you stumbles onto the credit union industry and then thrives like you have. So take it from when you got to Michigan in 2000 and kind of how Michigan First Credit Union was rebranded from Detroit Teachers, and how you have kind of come to be the credit union that you are.
Well, when the opportunity came up to come to Detroit, on paper, the credit union looked like a gold mine. Every number was rock solid, with the exception of the loan to share ratio. It was in the 40s. And if you spend any time around Rex Johnson or the lending world, you know that isn't going to cut it. So when I came there and interviewed, the one thing that the board told me that they wanted, and believe it or not, it was a 1 hour interview, right, for the CEO job. They told me, they said, we want Nordstrom level service. I had no idea at all what the level of service was at that point in time. Come to find out, it probably wasn't even at Kmart level, but they wanted Nordstrom level, and we just went to work. One of the things that I've been privileged to have as a board of directors that frankly has said, go do good things for people and our members and our team members, and then figure out how to pay for it. And we've followed that philosophy ever since. The board has been gracious to accept a lot of our ideas of things that we wanted to do and expand. We slowly built up the organization in talent. We rapidly did work in the loan area. We had to improve our lending. When I got there, it took 2 days to make a loan decision. Within 1 month, we set the limit. We said within 1 hour, you have to have a loan decision. And so we did that across the board, and the credit union set expectations because the credit union at that time really served team members. They didn't serve members. And we flipped that philosophy around, and the rest is kind of history.
Well, we're going to talk about leadership traits and valuable leadership lessons, but one of your leadership traits that I most admire, and I admire this in good leaders, is modesty and humility and constant references to the team. You reference your board and your team. But I have to say that under your leadership here now in the last 20 years, just the culture at the credit union, the way it's evolved, the headquarters. I mean, you have a headquarters and a culture at your credit union that rivals any progressive big tech company. So you attract and retain talent. Your credit union is progressive. When you reference lending, for credit unions, lending is so integral to member service because we just happen to be lending institutions first and foremost. And so being able to ramp up and serve the areas of Michigan that you serve, Southeast Michigan primarily, although your charter is statewide, there are so many financial services needs that really can only be met by credit unions, and you've just done that in a model way. So let's transition to leadership. You stumble onto credit unions from the Postal Service, you get promoted, you work in a few New York credit unions, you recruit to Michigan, and you spent most of your career here with Michigan First Credit Union doing amazing things. And along the way, I'm sure you've learned some hard lessons, like me and like all of us, we've learned from our mistakes, but there have to be a couple of valuable leadership lessons that you reflect on, maybe things that you wish you had learned earlier in your career, maybe things that have served you well, maybe things that you've observed in others that on your team. But let's talk about leadership traits that are so important today.
Okay, there's a couple that come to mind. One of the things that I've always been attracted to in my career is rebuild opportunities. Typically in rebuild opportunities, you have to go in and fix things. Things aren't working right, people aren't working right, and you've got to make changes to operations, sometimes to the team itself. One of the things that I wish I had been able to balance off a little bit more during those rebuild processes is the trait of empathy. That's something that I've been able to learn a lot more about during maybe the later part of my career. As we've gotten bigger, we've gotten a better talent on our team, better to be empathetic. And I think we could have employed that a little bit better earlier on. But frankly, it was just about getting things done. And sometimes I probably ran over people that I probably didn't need to. I don't do that today, but it's a valuable lesson. And then the other lesson is, on the positive side, I've never really been afraid to surround myself with people who know more than I did. I don't need to be the person in the room that knows the most. I have certain skill sets and strengths, but others have other skill sets and strengths that we need on the team. And we've been able to employ that. And I think that's been one of the reasons we've been so successful.
Both of those things you mentioned come from confidence. Leaders obviously have to have strong personalities, ideally, and have a lot of confidence. And I know I listen to you and I see some of what you're talking about in myself, because I started out, I think I was like you early in my career. I had a tendency to just want to get things done. I wasn't as empathetic as I needed to be. And, so I really appreciate the reference to empathy. And I think that goes hand in glove with being comfortable and confident enough to surround yourself with people who are smarter than you are in certain areas, and being able to empower them. Those are great traits. So when you transition from leadership, so those leadership traits, and you build the culture, it's really all coming back to how we serve our members. We're in a service industry where we tout the credit union difference. We're not-for-profit cooperatives, and yet we offer banking services, but we do that in unique ways. And I know with your field of membership and the markets you serve, you really stretch to know your members and to serve their needs. So for you and Michigan First Credit Union, talk about the credit union difference and how that plays out.
We have an opportunity, anybody that's involved in credit unions, is to impact people's lives. And one of the things that I've learned is I frankly have worked in different economic marketplaces, geographical marketplaces, is that people at their core have all the same needs and wants. It's just some have more particular needs and some have more resources, but at their core, everybody wants to have a safe environment. Everybody wants to have good things for their children. They want better lives for their children. They want communities around them that are prospering. They want jobs. They want economic prosperity, all those kind of things. So it doesn't really matter where you go or what environment you serve in, as long as you connect with the needs of the individuals that you're serving. Credit unions have the ability to do that because we're not caught between two masters. We don't have our owners on one side pulling on one way and our members on the other side pulling a different direction. They're all the same group. So if we focus our efforts on serving them and taking care of them at the need level, we end up winning. We are fortunate here to be able to have a lot of members that frankly need us. Many of our members live paycheck to paycheck. That means they stay connected to us in a way. Sometimes people with a lot of resources, other places want them, they woo them, they're trying to get those kind of members. There's not a lot of our members aren't necessarily wanted in other places. And so we have an opportunity to build on that loyalty with them, unlike other banking institutions. So one of the things that we do here is we put no limits on what we're going to do for members, as long as it's within the bounds of integrity. We don't have a credit union or a banking or a financial institution mindset that says we only do this. So we try to do many different things for whatever, wherever the need is, we might do it.
Well, a couple of really powerful concepts. One of those I had never heard expressed like you did, and it's kind of funny because I've been the association leader my whole career where I'm trying to promote to lawmakers what the credit difference is. I've never heard it expressed that way, that we don't have two masters. I think that's wonderful. We, as cooperatives, we answer to our members ultimately. We don't have outside I reference the fact we don't have outside stockholders, but I love that analogy to only having one master and not being pulled by the stockholders to generate a profit while at the same time pulled to serve customer needs. I really like that. And I do really appreciate, and I see it in the way your credit union operates, the fact that it's kind of a mixed blessing or a mixed bag that, yes, your field of membership, and this is true in Michigan, it's true across the country, a significant percentage of credit union members live paycheck to paycheck and they're financially challenged. And that creates loyalty. We see it in the surveys, the consumer surveys that we do, that consumers value credit unions more than bank customers do. But I love that. And I love how you describe being innovative and stretching to serve needs, because the needs are so ever changing. And that's a segue to the next question. So in the midst of COVID here and the economic cycles we go through, we had the Great Recession. This is just the latest recession driven by a worldwide pandemic. But here we are once again, where with the foundation of maybe 40% of your members already living paycheck to paycheck, you have this added financial stress on top of that. How is that changing the way that Michigan First is looking at service, looking backwards 6 months and maybe looking now and into the future? How is it changing the way you're approaching serving your members?
Well, the approach we took was fairly simple. Obviously, early on, we had an environment where we had things going on, but we didn't really understand them. Maybe scientists didn't understand. We were getting a lot of conflicting information, like everybody was, and we were all trying to deal with that. But one of the principles that we have here is that the members own the credit union. We don't have a right, okay, to pull back from serving them, okay, if we can possibly find a way to do so. So we took a little bit different approach as we decided that we were going to stay open at all costs, maybe not at all costs, but no matter what was going to happen, we were going to find a way to stay open. As you know, we probably have maybe the highest number of members visiting us on a regular basis. So it wasn't an option for us to just say, oh, use the drive-through, because they're already packing the drive-throughs on normal days. So we decided to stay open, did all the internal things that the CDC recommends and all those kind of things. But we said to our members, we are not going to add to your stress level by making you worry about whether we're going to be open or whether your money's available. People that live paycheck to paycheck visit us more often, call us more often, because they're trying to keep track of those pennies that they have. And so we needed to make sure that we didn't add any more stress to their life. And so we did, and it seems to have worked. And frankly, we're probably having the best financial year we've ever had in the 20 years I've been here.
And what about as you look to the future, and as you do your planning for 2021, what are you seeing in your forecast and your crystal ball? Is it positive or is it uncertain?
I think there's a certain level of uncertainty. I'm not sure anybody really knows what the government entities are going to do. I frankly am probably less worried about the COVID environment than I am about the possible regulatory change environment in Washington. We all know what that was like 4 years ago, and we were relieved of it for the last 4, and it could possibly come back with a vengeance on, the other way. I think that's more harmful to us, frankly, than the COVID thing, which is serious enough, but I think it's more harmful.
I wrote an article as part of my CEO Connect series a couple of weeks ago that was referencing, where's the country headed? Where's the economy headed? Because they both go together. And the Conference Board, which I reference, which is the consensus of economists, they reference some of the things that you said. When you talk about the future, it really depends on, will the government put more stimulus dollars out there to help people get back on their feet? Will we have a vaccine broadly administered? And will we have the things happen in Washington that reduce barriers and that instill consumer confidence? Those are a lot of variables. And at least, I feel positive because vaccine is on its way. Whether it happens in lame duck or after first of the year, I feel like there will be some additional stimulus dollars coming. And I think by and large, people are feeling some hope and some confidence. And if that continues, I think credit unions will be just fine. But we are going to see more evictions and more foreclosures and more financial stress there. Now, you lived through the Great Recession. You navigated brilliantly through the Great Recession. Were there some lessons that we learned then that we might apply to this economy?
I think that actually the Great Recession, as we call it, was probably worse for us than what the COVID has been. We didn't have the stimulus dollars in place. Plus, I think a broader section of our economy was impacted than has been impacted this time. The principle that we follow is that we work with people on an individual basis. We don't do any broad brush solutions or approaches to it. We say, if you've got a problem, if you can't meet your payment, come talk to us. We will figure something out working with you. And we end up with a lot of customized solutions for members. So we did that back in 07 and 08. That seemed to work very, very well. And it's continued to work throughout, and the COVID issue. We probably right now, Dave, we probably only got about half a dozen houses that likely will go into foreclosure that we've been holding on to. I mean, for an institution our size, that's a really low number.
I agree with those perspectives. The Great Recession was driven by plummeting home prices, where really a majority of the population was underwater on their mortgage loans. Much different scenario than what we face here. Let's wrap up with a question about Michael Poulos personally. Share with our listeners and our viewers, how do we get better acquainted with you? I know you're probably type A, hard driving, hard working, probably have been a workaholic at times in your career, but I know you have a personal side with a lot of personal interests. Can you help us get better acquainted with you?
Sure. If you ask my wife, she'll tell you that I know how to relax really, really well. I do, and I like to golf. I like to bowl. One of the fortunate things, even with the bad weather, is that, as you know, we have our own 8-lane bowling center here. Okay, that's open to our team, and we still are bowling in leagues here and so forth. So recreationally, we've been able to fulfill that need, and desire as well. But as you know, being a CEO, being in charge of anything, there aren't a lot of extra hours, okay, to do those kind of things. I wish I could do more of it, but those are the kind of things I like to do if I have the time.
So with your bowling average, which side of 200 are you on?
Definitely on the lower side of it.
Yeah. I think I've heard it said that per capita, we have more bowlers in Michigan than any other state. I think that probably correlates with our weather somewhat.
It does, and that's actually what helped us drive the decision to put a bowling center in our new building rather than some other things that we could have done.
Well, Michael Poulos, as I said at the beginning, and as you know, I have tremendous admiration for you and for your team and for the credit union and all that you do. And I say it often, but from an association perspective, it's credit unions like Michigan First and leaders like Michael Poulos that make our job as an association so much easier, because we have so many great stories to tell. Thanks for being on the broadcast with me. I appreciate it.
Thanks for having me, Dave.
Well, I hope you enjoyed the conversation with Michael Poulos from Michigan First Credit Union. That actually was our last broadcast with this one-on-one leadership approach, talking about leadership and the credit union difference and operating during difficult economic times. After the first of the year, we'll start a new approach with a credit union CEO and a C-suite member with very specific topics. In the first quarter, we'll be emphasizing human resources issues and the kinds of decisions that build a great culture for our credit union staff. But talking to Michael, I really appreciated him referring to the importance of empathy and understanding that it's important to surround yourself with people who are smarter and better than you are, and having the confidence to do that. When he talked about credit union difference, I really loved his reference to the fact that credit unions are unique as cooperatives because we don't have to serve two masters, stockholders and customers. We have one master, and that's the member. So many members live paycheck to paycheck. Michael reinforced the point that's a challenge, but it creates tremendous loyalty when credit unions are able to serve those very significant needs with those members who are financially challenged. So it was a great conversation. I hope you enjoyed it. Thank you for listening to our final episode of Friday 5 with Dave Adams for 2020. Merry Christmas to all of you and Happy New Year. We look forward to future episodes in 2021.